Although the Dow was down 200 points today, note what it did. It bounced off the 200-day moving average and came back up above the T-line. Now, the expected profit taking was not out of the question because notice what happened on Wednesday. There was our little gap up in the Dow in the overbought condition, followed by a bearish doji Harami, pretty much telling us the selling had stopped. That told us immediately what the market was going to do based upon how they opened the next day, meaning today. So this would have been a warning to start taking some of the profits that had been developed in this uptrend. And if it opened lower today, take more profits. That same scenario can be applied when also in analyzing the NASDAQ. Again, a little gap up, a bearish Harami, a lower open. But once again, note how the NASDAQ also closed above the T-line, as well as the S&P 500. This also provides the analysis that if as long as you're trading above the T-line, your uptrend's in progress. Because there was an indecisive trading day today in the indexes, it also makes it very simple to analyze what's happening tomorrow. If the pre-market futures are showing a lower open, that tells us they're not holding on to a support level of the T-line, and we might be heading back here or back here, giving more reason to take some profits and or start going short. And the major benefit of identifying patterns and knowing what the results are from those patterns keeps you in positions where our recommendation on Aqua, notice what happened on this fry pan bottom breakout. Today the market's down 200 points. It was still trading positive. Not because of anything more than a pattern. It's usually a buildup of investor sentiment and usually is created by things other than just the effect of the overall market trend. So identifying a pattern produces two results for the candlestick investor. One, usually the profit potential is much greater than just a merely uptrending stock. And two, if there's a big reversal in the market, usually the pattern takes more time to start selling off, giving the candlestick investor more time to get out with a profit position. Whether it's a pattern or a signal, such as the kicker signal that caused our recommendation on USFD. Notice what it did today after the kicker signal of last week. The strength of individual candlestick signals provide a cushion that if you're in signals and patterns that are working well or working like they should, they're going to offset any major selling or any reversal in the overall market. This also allows for setting up profitable trades even though the market may not look good overall. For example, Crone coming out of this big fry pan bottom, doing a strong price move. When was it time to take profits? Going to your 10-minute chart up here and seeing when the selling occurred. Why do you do that? Because the very simple rule that the further away you move from the T-line, the higher the probability it's going to come back and test it. Now, once they've come back and tested it, we can see the bullish engulfing signal right smack dab on the T-line, which means if they start trading positive, your classic pattern setting up. Your fry pan bottom, strong price move, J-hook pattern, getting ready for the next strong price move. Candlestick analysis merely lets you identify where the strength and weakness are with what investor sentiment is doing to allow you to get into profitable positions when the rest of the market may not be showing good strength someplace else. That'll be it. We'll see you in the chat rooms.